Start here. So good morning, friends. We are on the second day of Brand Fest Season 3, and we are delighted to have Saumya today with us, along with Neeraj, who is going to moderate and coordinate the session today. Let me quickly introduce Neeraj to you. Neeraj, a very good friend of mine. Actually, if you professionally ask me, he's trained as an interior designer from SEPT, co-founded I Do Designs with Manali, his wife and partner, that today provides design services in interior designs, identity design, branding, and marketing strategy. Presently on the National Executive Committee of Indian Institute of Interior Designers, he is also into startup consulting and is actively mentoring a lot of startups in different industries and also being an investor too. Being involved in teaching, which is his passion, and mentoring for last 20 years, he has also guided a lot of theses. More than 20 theses he has guided them while invited as visiting faculty and jury as at SEPT, UID, Anand, and Oro University. He's been always interested in learning. I have personally witnessed that. So his academic interests have led him to pursue strategic management from IIM Kolkata, design thinking from MIT US, and corporate communication from AMA. So I invite and I welcome Neeraj to moderate and coordinate the session. Thank you for accepting that. Neeraj, all yours.
Thank you so much, Sanjay, and congratulations on the third edition of Brand Fest. It's always been a pleasure, to associate with this, and I think the number of participants has been increasing over a period of time. I see that it's a Sunday today, but I know how it happens, and I know a couple of friends where the offices log in and the entire teams are watching this because there's so much, very nicely packaged learning to take away. And I think that is what has happened in the previous two sessions as well. Thank you so much for getting me here and being witness to so much that is happening in the world of branding. We have Saumya Mohanty here with us today. What pleasure to introduce you. Let me take from things that the internet has provided about you, and I don't know whether it's enough. But Saumya Mohanty is a Managing Director and Chief Client Officer, Insights Division at Kantar. She brings with her over 2 decades of experience in market research, consumer behavior across sectors. Having studied economics, graduate from Delhi University, and then an alumnus of Indian Institute of Mass Communication, Saumya has her experience spanning 3 areas, mainly data analytics, consumer insights, building a resilient and commercially strong business, and creating high-performing teams. Now, her expertise lies not just there, but it's also in terms of what kind of human stories exist within that data. Taking the voice of the consumer to the boardrooms to be able to make sense of the data beyond just being numbers, to be able to create social impact is what actually drives her. Saumya has had a keen interest in the application of translating analytics and using multi-source data for compelling business decisions. Obviously, she's a regular speaker at industry fora. She's been invited at many forums to give her insight through the papers that she presents at the symposia. Over the years, the experience has spanned from regular market research for companies from launches to insights with Ipsos and Nielsen. And now with Kantar, what she's been able to do is to be able to converge both the marketplaces, especially the online market space. So welcome, Saumya. It'll be great to hear you. We will take questions at the end. If there is something pressing and which needs to be explained a little better or a little simpler, I may butt in, but otherwise the mic is yours. Welcome.
Sure. Thanks, Neeraj. Am I audible?
Yes, you are.
Great. So I have a few slides and I'll just share them. Just let me know if you can see them.
Yes. Yeah, we can.
Okay, great. So I think the topic that Sanjay asked me to speak on is brand valuation methods. I have interpreted it slightly differently. I'm going to talk about brand valuation method for sure, what Kantar uses, and in context of that, what I know others tend to use, but I also want to talk about why brands are important. And therefore, when we value brands, many times we miss out brands from the valuation. And that is a critical aspect that we need to sort of focus on. So I called it making powerful connections, because that's how brands create value. Finally, what are brands? They are just intangible concepts in the consumer's mind. But that concept makes us pay more for soda water with a label called Coke or Pepsi versus a normal soda water. That concept makes a chip inside a computer, which nobody knew about, become Intel Inside. And today we are seeing branding pretty much across all types of sectors. Commodities which earlier we thought would never be branded are being branded, from pipes to wires to, I mean, pretty much everything. The attempt is to make it branded. And the reason for that is we think that when consumers buy brands, they tend to, number one, they tend to buy more, and number two, they tend to pay more for it. So, and yeah, Sanjay, you can, sorry, Neeraj, you can ask me questions as we go along. So how do brands create value? First thing is, why do we need that value? We need that value so that we can sell more. So first thing is, we should be able to sell more, have higher market share, expand the category that we are operating in. The second is, it should lead to higher profitability. As a brand, we should be able to charge more. The third is, it should lead to effective activation. What that means is, a brand should allow us to enter more channels more easily, get more shelf space if we are a FMCG brand in a store. Just make it easier for us to distribute and reach consumers. And finally, future security. And that's an important concept, because a lot of times valuation, the way we understand it, and all of us are now seeing the impact of financial valuation, without a core strong brand at the heart of valuation, future security is something that could be a problem. So I'm going to actually use a lot of data from our Kantar's BrandZ, which is the world's largest brand building database that exists. BrandZ actually has 5.4 billion data points over the years. In India, we are celebrating our 10th year this year. What BrandZ does is that it measures brand value across brands across the world in something close to 50 countries, 51 countries, 522 categories. And we therefore have a longitudinal data of how brand value has progressed across sectors, across the same brand over the years, and how that has changed across the world and in India. And what it does is, it connects brand value to business value. So brand value does not sit in isolation, but we can demonstrate that a strong brand actually leads to higher and better financial returns in future. So this is actually the global BrandZ data. And what it shows us, I'm just trying to find the point, give me a moment. What it shows us, this is the line of the top 10 in the BrandZ global portfolio, and it outpaces, the share value outpaces actually all the others, as you can see. And even when there was a drop in 2020, when all of it went down, the resilience of the BrandZ portfolio is stronger than the others. So what this proves is, BrandZ portfolio, which fundamentally is built on brands contribution, which is a fundamental difference between BrandZ portfolio and most other valuation methods that exist, which are mostly financial valuation methods, they tend to outperform the rest. And this is actually global data from 2006 to 2022. I can show you the India data, which is not too different. Even in India, when we compare India's top 75 portfolio to Sensex or to Nifty, BrandZ tends to outperform all the time. Even in
sorry, Saumya. Are you sharing the screen? Because we're not seeing the screen.
Oh, you're not seeing the screen?
Right now. No.
Are you seeing it?
No, not at all. Not yet. Sanjay?
We can see it.
You can see it? Okay, sure. Okay, thanks. Okay. I wasn't seeing it, that's why. Sorry.
Okay, because it shares stop. You are screen sharing, so yeah. Okay. Cool. So even in India, there's something in the chat. Is that you, Neeraj?
No, no, somebody's saying that we can see
Oh,
that.
okay, cool. So even in India, the Ramsey top 75 does outpace the rest of the brands. And that's something, and when it drops, it does tend to hold better. The gaps are not as wide as you see in the global portfolio. And there are reasons for it. In India, we tend to underinvest in brand building, if I was to be very frank, compared to what we do in rest of the world. We tend to, we don't believe as much in brand building as you see in the developed markets of the world. So therefore, to that extent, the resilience is not as strong as it was proven in the global portfolio. It's just stuck a bit. Okay. So global top 100 actually account for 8.7 trillion, which is about 9% of world's GDP. And the value increased last year in 2022 by 23%. And if you contrast that to India top 75, the value increased by 35% from 2020. 393 billion, which is equivalent of 11% of the GDP, is what India's top 75 brands account for. So brand valuation and strong brands is more important than it was ever before. And this is the broad process we follow. So most valuation methods that you would have heard about tend to look at financial value, and the way to do financial value, and that tends to differ, but mostly there is a present value and there is a future value. Future value is obviously an estimation of how the brand is progressing based on mostly financial analysts who look at how the category is going to do in future and how the brand is going to therefore do. And a lot of it is, I mean, honestly, storytelling when you look at startups, because those categories didn't exist in future. So there is a financial value component, which is what we also use, which is not very different compared to what financial analysts do, which looks at what my current value is from whatever sources that are available, and also some amount of projection to future. And what we do, obviously, is we, when we look at brands value, because this is Brandzy's brand value, we strip off the infrastructure and all the physical assets from it to arrive at the financial value of the brand alone. And then what we uniquely look at is the brand contribution. The brand contribution is how strong the brand is in the consumer's mind. So what are those mental connections the brand has beyond its financial value, which makes it a strong brand? And we merge the two to create the brand value. And if I was to just talk about it slightly more deeply, there is a market perspective and there is a consumer perspective. The market perspective tends to be more volatile, as all of you know. It's impacted by macroeconomics. It looks at future performance, which is stock trading and share price. And it's honestly out of control of people who manage brands, because a lot of this is not fully out of control, but some part of it is definitely out of control, because there are a lot of other factors that play, which is what is happening right now, where the global headwinds are making a difference to India, even if our domestic economy is more resilient. But then there is consumer perspective, which tends to be less volatile. To put very simply, the consumer perspective is what we call brand equity, which is what the brand uniquely owns, can shape, can invest in, can control. This is to do with strategy, your budget, how you are communicating to your consumers, and that together gives us the brand value. I mean, I've pretty much said this. So financial value, we calculate at an individual brand level, and then we look at how much of that brand's financial value can be explained by brand equity. This is the part that most of the valuations miss out, and that is why we are looking at the kind of valuations we did look at and where it has led us. So that's what Brandzy's brand value is. And I mean, as I showed this slide earlier in terms of what brands do when they have value, they are able to charge higher price, they're able to sell more, they're able to sell more for a longer period of time. This is something we tend to forget. It's not about selling next quarter, it is about selling over a long period of time. And in our short-term, long-term thinking, brand investment always takes the lower priority, because the next month's sales becomes more important. but it's important to remember that we need to be able to sustain sales and to sell more efficiently as well. And therefore, the two components which are important are mental connectivity, which is what is it that we stand for in the consumer's mind, and physical connectivity. Are they able to find us when they go to buy our category? So I should come easy to the consumer's mind, and I should be easy to find. Easy to come to mind, easy to find. Mental connectivity and physical connectivity. And we tend to use this as a construct. I mean, there are different constructs of brand equity, but we tend to use this, which is, as I said, how quickly does a brand come to the mind at the moment of purchase or usage? And this can apply to any type of, any brand, any category, any consumer, or even in B2B brands, it is the same thing. Does this company or brand come to my mind when I have this problem or when I have this need? That's salience. Meaningful is very simply, is it relevant to me? Do I have both a functional and emotional connection to this brand? And finally, does it offer me something that nobody else does? Now, this does not mean you have to be, and this is the problem we always face with brands that are, let's say, I mean, for the lack of a better word, Me Too brands, because there is already a leader brand, which is already there in the market, already there on the shelves, already penetrated. And when you are already a big brand, you tend to grow faster. That's a natural thing, because big brands tend to add more easily than a challenger brand or a Me Too brand in categories where there are many categories have lots of Me Too brands. So what does therefore different means? Different means that there has to be something. It doesn't mean you have to be extremely different, or there has to be something where the consumer feels, it could just be price also at times, that I am a little different from what others are. I stand for something which is not exactly the same that others stand for. So salience actually builds familiarity, which means that just assume I am in a place where I don't know anybody. So I'm in India. I go to Nigeria. I've never gone to Nigeria. I walk into a supermarket. I don't know any brand. And I see a Coke. So that familiarity is what this is all about. And different is, I walk into a superstore and I see something, I see a packaging which attracts me. I see something which is a little different than what I'm used to seeing. Now, different does not mean distinctiveness, which is I stand out consistently, I'm doing something different. It means my proposition is different than what others are. And we actually have data to prove that when you are meaningful and you are different, you command a high demand power, a high pricing power, and a high future power. So you are likely to grow today with a high demand power. You're likely to get high prices, and you're likely to grow your value share in future as well. And this is pure data, which shows that brands, we use the term brand power for brand equity. So when we looked at the India data, we found that brands that did not improve in power versus brands that had a positive impact in power, there was almost 100% growth in their average brand value. So the average brand value of a brand that maintained its power compared to 2021 versus 2022, to two brands that are actually grown, it's almost 100% difference in their brand value. And despite that, it's very interesting that in India, the brand power, which is brand equity, on average has been dropping. So what this means is that brands are not investing enough in brand building. So number one, there is competition which is increasing. So there are more brands which are vying for consumers' attention. We are not investing enough in brand building. So the average brand is actually dropping in power. And consumers are likely to, therefore loyalty will drop. Consumers are likely to flirt a little more, and brand power or brand equity is also been dropping at a time when brand equity is so much more important than it ever was in the past. Just let me know if you want me to take a pause or I'm going too fast.
No, I think it's absolutely all right, because it's all so connected to each other. So I don't want to disturb it right now.
Sure, sure. So the minimum value to get into the global top 100 is actually continuing to rise. You can see here, this is about 4 billion. It's gone up to close to, I think it's about 16 billion. So the minimum value to get into the global top 100 is continuing to rise, which means it's not that easy to get into the brand Z portfolio as it was. And the reason for that is there are just that many brands in each category. So to get through is that getting that much more important. So breakthrough is getting that much more important. 3 brands actually made it to the global top 100, which is TCS, HDFC, and Infosys in our last year's ranking. And that's interesting. As you can see, 2 of them belong to the, and actually all 3 are fundamentally services brands. None of them, except HDFC, is a consumer-facing brand. So the point is, it's not just consumer-facing brand that can build brands, it's also B2B brands. And we have a significant number of B2B brands that actually did very well last year. B2B IT brands, different from consumer tech brands. So B2B IT brands actually did much better than consumer tech brands. Consumer tech brands have also been doing well, but not to the same extent. And Airtel actually broke into the top 10 global telecom brands in 2022. And they did that after surviving a price war with Jio. And pretty much, if you look at Airtel, they have invested in brand building, where they did not exactly drop price to the same degree, because that was the most natural response that could have happened when Jio came in. And they have grown what we call the premium index, which is the willingness to pay more. They have actually grown from 2020 to 2022, worth more than its costs have grown. Fantastic advertising, which they have kept on, but they have also delivered to what they communicate. And the brand value has grown, and it's the only telecom brand that has broken into the global top 10 telecom brands through brand building, fundamentally. If you look at Infosys, what Infosys has done is different because it's a B2B brand. It's not a B2C brand. But if you look at the growth in their corporate reputation scores, the growth in their purpose scores, and when we measure brands, we measure it in the right cohort or the right group. So Infosys is actually measured among IT decision makers, not just in India, but because most of their business comes through exports in US, and wherever they export, that's where we measure it. So the point is that their consumers, their customers see improvement in their corporate reputation, see improvement in their dedication to the brand purpose, and those are making a difference in an increasingly digital environment. And they also feel that the company treats its employees well, gives better financial returns. So different strokes to different folks, as you say, but both have invested in brand building in their own ways. And that's what Brand Z shows, that there is value in brand building. So on average, the top 75 brands, so across all brands that we measure in Brand Z, the top 75 brands are above 100, as you can see, in being meaningful, in being different, and in being salient. So in all the 3 brand equity pillars, they are above 100. The average is 100. The other brands would be, many of the others would be way below 100. Salience is one thing that's extremely important in India because it's an emerging country. So in an emerging country, first, the customers and consumers should know you. And therefore, salience is very important. Plus, it's a very competitive market. And that's what makes this is much lower in many of the developed markets. Also, an interesting point would be, depends on your brand's journey. So brands that are new should ideally will start through salience, meaningful salience, as we call it, and be different. Whereas a brand that's an established brand does not have to invest as much on salience as probably to stand out, because they've reached a point at which consumers are super familiar with them and maybe looking for some new news from them, and definitely be relevant. So the journey can differ depending upon the brand's own evolution path, also the country's evolution path. But what is really important is, to be a strong brand, you need to be above that threshold of 100. And that does lead to, as I showed you, increase in valuation. So these are the 3 things that we actually said are brand imperatives in 2022. We'll come very soon, we'll be back with the 2023, but I don't think some of these will change. One is building relevant salience, standing true to your purpose. Purpose emerged as a very important driver this year, and building a responsible brand. So till now, what I have, so this part of what I have shown till now is about the importance of brand building in financial valuation, in shareholder returns. So the first thing is we need to get conversations around brand into the boardroom, because it's not just about sales. It's very important to keep investing in your brand so that the future sales sustains, so that equity builds, and valuation is not an empty valuation, but a valuation that will last, because there's a genuine consumer affinity behind that valuation. So that's the first part of what I've shared. Now for the next 10 minutes, I'll just walk you through what we found are the relevant levers which are helping build equity in this world, in this new world. So these are the three, which is relevant salience, standing true to purpose, and sustainability. And what is building relevant salience? And this picture is an interesting picture. This is actually caviar, and which is not something in most of us like have on a normal day or even an abnormal day. So this is not relevant for sure. So building relevant salience is building culturally appropriate salience at the moment when your consumer is most likely to see you. It could be online, it could be offline, it could be wherever, but culturally appropriate salience. This, for example, is relevant salience, because this is something all of us know. So salience is the mental availability of the brand. How quickly does it come to your mind? Meaningful is whether it meets your needs and whether there's an emotional connection with the brand. And when both come together, when it's just improvement in salience, the change in average valuation is 16%. There is still a change. It's still a positive change, but it's only 16%. But when you layer meaningfulness to it, it grows to 31%. And Oreo, which actually won the award for the most loved brand in India, has been doing it. And look at all the pillars are very strong. They have grown tremendously in relevance, which is 91 to 126 from 2019 to 2022. And what they have done is, I mean, you see Oreo across, it's not just biscuits anymore, right? There is Oreo, they have infused Oreo into categories which they don't sell many times. So I think there is Walls, which has got Oreo infusion in it in their ice cream. So it's not so in that sense, they have gone way beyond the category and they are present in many moments. Look at Cadbury's Silk with Oreo. So sorry, these kind of innovations has actually led to Oreo creating a salience which is relevant and way beyond just their own category. I think I will need to get my charger, but I'm hoping it will last. The second one is standing true to your purpose, which is, I mean, I know we have always been questioned that do consumers really care for purpose? Now it depends on how you define purpose. Purpose is the reason why your brand exists and the impact you have on people's life and the world they live in. There are two parts to it. One part to it is the reason why your brand exists. Why are you selling this? Why is it there? What is the need for having a brand? And the second is, what therefore does it do to my life and to my ecosystem? So it's not just about spending money on saving, rainforests in Amazon. It's not relevant to Indian consumers. But, and it's not even about charity. It's not even about, so many times purpose simply is being true to what your brand is about and making your customer understand why should they believe you. Why should they pay more for a branded atta, for Ashirwad versus a commodity atta? Why should they pay more for a branded sugar versus a commodity sugar? Why should they pay for Tata salt? Why should they even buy Tata salt versus salt in general? So it's the purpose. Purpose is why that brand has come to existence. And it's really important for us to differentiate this from the company purpose that seems to be written in pretty much every organization has that written somewhere. So Nike is a brilliant example of a purpose, and they have found a purpose which is not just the purpose of the brand, but they have connected it to the world. And they have connected it to what you believe in and what you stand for: authentic, brave, relevant, responsible. So this is an interesting thing. Indians actually expect brands to do a lot more. So we run a survey called Global Issues Barometer, where we ask people who is responsible for tackling environmental and social issues. And in India, the fact that they expect companies and businesses to do it is slightly more than in the rest of the world. What we also find in India is sustainability and purpose is a greater driver of brand equity. It leads to higher brand equity compared to any other part of the world. And that many people find very strange. When I show this in forums which are outside of India, they can't believe, why should an Indian consumer in a third world country really care about purpose or sustainability? Well, they do. They do because they are facing the challenges of climate change more. They are facing the fact, they're facing the challenges of everything that the kind of consumption-led lifestyle that we have been leading has led to. So they have become, and plus India has always been a sustainable economy anyway, right? And from the past, we believe in recycling. So to that extent, Indian consumers, as long as you don't expect them to pay too much more for it, do believe a little more around purpose and sustainability. And they also hold companies a lot more responsible, whereas globally, consumers tend to hold governments and multilateral organizations a lot more responsible. In India, we give a little more leeway to our government and a little less leeway to companies and brands. And valuable brands actually have a clear brand purpose. There's a 62% growth in valuation if consumers feel that you have a brand purpose. Tata Tea, again, they found a fantastic purpose, which is Jagore, which they have actually consistently spoken about. So the good part of it is they found something which is different. Now, we could call it a communication idea, but if you really think about it, tea is about waking up. Jagore is about waking up. And then they have connected that to a bigger social issue or a bigger social theme, and they have remained consistent on it. And so you can see they have consistently been strong on purpose, on open and honesty, corporate responsibility, and they have grown on brand valuation as well. And the final one is actually building brand responsibly. And this picture pretty much captures why it's important. And this is global data. Sustainability as a driver of brand equity. By driver, I simply mean if I think the brand is sustainable, the equity will be higher, the overall equity will be higher. The global average is 3%. This is where US. So you can see this is actually strange data, you could say. In China, in Saudi, in Indonesia, and India, they think sustainability is more important. Yes, because they don't get it. Because they will face the aftermath much more than the developed economies will face. And the business risk is therefore higher. I think sometime back, if we all remember the whole water thing that happened in Tamil Nadu, if I'm not wrong, where all the beverage companies had to scramble because consumers were not very happy with the way the water table was getting depleted and the way water was getting used. What we see happened on Maggie. So the business risk of not seemingly committed to sustainable business, for lack of a better word, sustainable business in India is higher than it is in US, especially, by the way, for multinationals, but even for Indian companies. And India actually shows there's 108% growth in value if purpose is led with sustainability. And India has certain areas where they want to see more action on: poverty, hunger, well-being, clean water, life on land, life below water, climate action. So you don't actually find corruption. So different countries have different things that they find important. In India, it's a lot about roti, kapda, makan, and there should be no impact on each of these for us. So these are actually the
Sanjay, that's really interesting. I think we'll just wait for Saumya to get back till she's able to charge her laptop or whatever. Yeah. But I think the insights have been fantastic. I would love to have, somebody in the audience also put some more questions on the chat. If they do, we already have a set of questions that we can ask because this is so brilliant. I mean, I think the first thing out of the crowd that we have, most of us are kind of on the advertising, marketing, strategy, design side, and I think it's going to be great to get her to give us insights not only on the methodology, little more, but also in terms of what could be the strategies, to push clients to actually start spending better on branding.
Exactly.
Right, and and also the myth, Sanjay, that which ad agencies here in smaller.
Yeah, I'm sorry. I'm
tier-
really sorry. Come back.
No,
Can
no.
you hear me?
Oh yes, no problem. Lovely. That was quick. That was quick.
Is it still sharing?
Let's check. Is it sharing?
Do you want me to share? You want me to share again? I can do that.
Yeah, yeah.
You can see it?
No, not yet.
Okay. I seem to have lost the Zoom somehow. I can't find this. Okay, I've got it. It's sorry.
Backside open करके
Just give me a second. It should be now on, I guess.
Yes. It's there. It's there. Full screen, and we'll be good to go.
Yes. So I think these were the three, which is connect the brand to your customers and to the world around you, is what we said. And that's pretty much what it is from me, which is demonstrate the value of your brand to your shareholders. And that's what brand value is all about.
Super, Saumya. So we were just, when you were kind of lost for just a moment, I was just telling Sanjay that a large part of the crowd that we have today would be not actually brand owners, but most of them would be, professionals who are actually recommending brand building to their clients. What Sanjay missed out in my introduction, Sanjay, was obviously you must be very surprised at what is an interior designer from SEPT, doing here. We also have a vertical which is into graphic design, branding, strategy, marketing, etc. We don't call ourselves an advertising agency, so we're still a very tight design shop. And our concentration has always been on brand. And I think that's the reason why, Sanjay, and we connect so much when we have discussions like this. So the biggest question here is, of course, I'm sure that you have a very strong methodology, what Kantar follows in order to, because these are parameters that have always considered to be intangible. When the brand aspect itself is about building that, that perception in the minds of people, of consumers, imagine actually measuring it and, giving numbers and figures to it. So first of all, it's a beautiful presentation, and not because obviously you're so good at it and, this is your domain, but I like the visuals of your presentation. It's clean, it's crisp, it looks so good, and despite being so informative. So the first question leads me to is quickly, if you could just tell us some of the other parameters that are considered, other than the financial contribution to a brand. You said that it's not only from the market, but it's also from the consumer. And today the consumer demography itself, etc., is so fluid, So what are the methodologies or?
Yeah. So basically there is financial value and there is a brand value. The brand value mostly is essentially the way we measure it. We look at is the brand, and as I shared, is the brand sale. I mean, it's among your relevant consumers. So the first point we must remember is equity is built. So equity, there are two. I don't want to complicate this, but there are multiple views on brand equity. But there are two broad views. One view is you should build your equity. I mean, you should essentially build it among everybody. It doesn't matter if they are today in the market or not, because sometime or the other, they will have the need for you. Yeah. So basically, everybody who is broadly, in the same demographic group where your brand is selling, you should build your equity among those people. The second view is you should build your equity among people who are relevant, who are currently in the market, somewhat in the purchase journey, a little more advanced, somewhat in the need for your services. Let me put it this way. So it doesn't matter whatever the two views are, but the main point is equity has to be, you have to be salient. So if I have to get something done, I mean, I don't know, Neeraj, or whatever I understood from what you do. So if I'm a brand marketer and I want to, like, I want to do a campaign or something or whatever, I should think of Neeraj. So the salience to mind is the first point. Now, that's the first point. The second thing is, but I should think of Neeraj in the right context. I shouldn't think of Neeraj in general, right? Otherwise, it doesn't matter to me. Why will I reach out to Neeraj? So there should be something which makes you relevant to me. And finally, why Neeraj and why not Satish? I mean, for the lack of a better word. So that's the difference. So it's salient, meaningful, and different is what we believe. There are academics who have written books on only salience matters. Nothing else matters. Spend a lot of money. Everybody should know you. And that's enough. But that's a very... that's a very expensive proposition.
Correct. So I exactly, and I think a few of the examples that you had, they were very interesting. You know, to see if we want to learn out of these and suggest strategy, to some of our friends that we're kind of consulting. Okay, everybody. I think there is also going to be a large amount of overlap. It's not going to be only relevant, salience, or being meaningful as a brand. I think it's going to be all sometimes, two aspects coming in together. I think what happened with Oreo was both, right? It was salience and meaningfulness, or relevance within that particular segment. So I think that's a great learning. Now, the biggest question that we all have, and you said this very clearly, is that in India the spend is low on brand, and I think everything is related to sales. And we take a lot of time to kind of push this whole idea and say that and we try and link the ad spends, which is more visibility, but while being true to the brand, which means that the brand values are not compromised, so they are like equally important, besides actually talking about the product or USPs. So what we do is we sometimes break our campaigns into two parts, where we create something which is very, very clearly brand related. And two parts meaning it could be on an annual basis, meaning that two campaigns happen only related to the brand. And I'm talking about local brands, small brands, which are not national level, but they still have a large amount of presence. So the question would be that what is the right amount in terms of a percentage of money that one should spend on brands, and how much time is the right amount of time? Sometimes we tell people, our clients, to not hurry up, like take it cool, let's spend on it, let's do these things, activities, etc. And the value that you will get in return, all the three things: you sell more, you have higher profitability, or entering into other channels, etc. All those things will happen, but we cannot guarantee when, whether 2 years down the line, 1 year immediately, or 3 years. So what is the right amount of time for a small brand?
First thing is, everybody discusses this. This is like an existential discussion. So it's not that it's only discussed by small brands, even large brands discuss this.
True.
But yeah, there are certain things. There is a 70-30 that everybody, a lot of people talk about, the 70-30 or 60-40, where your long-term brand building should actually be the higher proportion, and your tactical should be the lower proportion. So whether you take 70-30 or 60-40, but it's not an either or. There is a thing called double jeopardy, which is a large brand continues to grow because it's large. That's actually the thing. So if I am large, I will automatically keep penetrating. Now, if I am a small brand, let's say a local brand in Gujarat, and I have to take on a large brand, then what do I do? Because the fact is, large brand will keep on growing. If I believe that, then there is no starting point. You have to therefore believe that you can, through brand building, take on that fact. I think our belief is, we put it into the store, we put it into the shop, and somebody or the other is going to pick it up. Yes, they do pick it up because of pricing, or because you have incentivized the store retailer so that your brand is coming in front, or whatever. But that is not brand building. At some point, it's going to drop off, and which is what we are seeing with so many of the startups. Though I have to say, Neeraj, some brands get built on instinct and gut. We have to recognize that. Haldiram, was
Yes.
built. I mean, it just got built. So, but what
Yeah.
happens is beyond a point, even the ones who are built on instinct and gut, even Amazon, after it has reached a certain stage, starts feeling the need for brand, because then it outgrows the owner.
Right.
It outgrows the founder's own, thinking of what I should do. It outgrows the intuition, and it needs foundation.
True.
And that is why, whether it's a Unilever, P&G, these guys are experts in brand building. And startups are the other extreme, where they feel that they can just do it. They don't need to. It automatically happens. But we have seen where that has led us. So you need to so at a point you will need brand building. When
True.
you start or you whatever, at some point you will come to that phase.
I'm so glad you said that, because it's almost sounding like what we keep saying. And coming from design and background, we were also a little shaken up when COVID happened, and we don't do digital at all. So we have digital partners who work on it. What we do is we still define the brand architecture, to a certain extent, to a good extent, and make sure. And now what has happened is that the communication needs to be predefined for all brands. At the beginning, in terms of what the brand wishes to say. So what we did is created what we call is, from the tone of voice for a brand, we started doing something which is statements. So those statements actually are designed for different stakeholders in order to communicate the product, USPs, etc. But keeping in mind that the brand is like this, right? So your tone and your statements kind of start aligning with each other. Now, the other thing that comes in from alignment is that, and tell me, I'm just saying this, you'll be able to throw some light onto it. A lot of brands also get lost, and you said this, difference between a new brand and a old brand, where salience comes in first and differentiation comes in second, and then meaningfulness. What we try to do is that some brands have grown, they've done good business, they've got sales, they've got numbers, but the brand connect or the stickiness is not there, and now loyalty is becoming a big issue, right? Especially with e-commerce brands and all that, and startups. So suddenly what we're doing is that in order to become meaningful, suddenly within a segment which you did not own, but you still are one of the bigger players, what we try to do is alignment, which means the brand starts now becoming more meaningful, but not in the same product or service. It starts becoming meaningful by aligning itself to a cause, not necessarily CSR, but it just says, so now we try and do this. That, oh, you're a real estate brand, from day one, start aligning yourself to, say, Indian classical music. So any examples like that where you think that the alignment also can help, I don't know, maybe just becoming a little more salient and meaningful.
I know a lot. I mean, this whole purpose thing started post-COVID. So the whole thing about, I'm like supporting something. The point is, it has to somewhere make sense for your brand. And so if I would say if Pepsi starts doing classical music, I'll have a problem. So it's somewhere, but if they support indie, indie pop or something. So there has to be some alignment between your brand and what you're supporting. Real estate, if I'm a real estate brand, I would be worried about what consumers will feel about real estate as a sector. And so I would actually think about what I can make, how I can create honesty and transparency, and therefore look for, that kind of area. So that's what I'm saying. So sometimes we take purpose we just pick up something which is the easiest to pick up, rather than something that matches the brand. And that's why, Neeraj, I think the whole point of when owner-driven brands, which is owner-led brands, which is a lot of Indian brands, by the way, at some point they outgrow the owners. And that's point, they need to actually stand as brands on their own. And at some point, all owners will realize it. But I think there's an interesting question on steps on brand, building a brand. Do you want me to take that?
Yeah, please, that'd be great.
So I think that one question is for sure that there is no point promoting the product. There's another question. Promoting the brand should be the product. Brand should be bigger than the product. So I think that question is very obvious. So, but product sometimes can give you a functional advantage to talk about as your brand. In terms of steps of brand building, exactly the same. If you're a new brand, you definitely need to come to mind and come to shelf. So be available and be present. in the mind and be present physically. I think that's
So
that's the first step.
which means visibility, right? Yeah.
Absolutely.
And which itself is a
visibility.
cost. Right.
Visibility also will cost you. So therefore you will have to go, if you create relevant visibility, you can go beyond the cost of acquisition, especially on digital. So if you need relevant visibility, so the content becomes very important. Many times content again takes the backstage and media takes the front stage. There's a lot of media wastage because of that, but that's it. So I think that's relevant visibility. As I said, meaningful salience is important. Everything is under it. All the purpose, etc., are roots to build meaningfulness or roots to build differentiation. The overarching thing is relevance and differentiation. Under it, you can have whatever levers you want to use.
Okay, nice.
Negative word of mouth. I didn't actually get what measure should a brand take to fade a negative word of mouth? You'll have to take it head on, I guess.
I think people in Gujarat are really worried about what's happening with the Adani brand, after the Hindelburg. So, so perceptions do matter, and word of mouth, and yes, and references today have become such a big deal, and which we think is going to be a bigger future now, because people are going to now start listening to other people. As much as today it was governed by a choice that somebody made without thinking. It's like, okay, my friend bought this brand of car and I'm good to buy the same, which is nothing to do with the stickiness of the brand or whatever. Now people are more aware, but then word of mouth referencing, you're making your own choice, but you're listening to people. And I think that's very good, because that means that, and where is that coming from? From an impression or an experience that the brand has given to that particular individual. So I'll come to one more question. That something that we faced, Sanjay, you're aware of it, and you mentioned Have More, right? As we've been associated with the family for such a long time. So what happened is that this whole idea of brand building, and there was never this idea of selling the brand, but we played a trick, because this is how the perception is. We said you can spend on brand building because you might get valuation, financial valuation in the future, and suddenly that's become a trick. And that attracts a lot of newer brands today or older brands to spend money on it, thinking that, okay, no problem, now we are okay to spend. It's not about perception. It's not about, sales and all that. It's because we will be able to sell better, if we have to hive off the brand. And this is when Huber and Hawley was kind of launched with the idea. So now my question to you is, any example of where there is a differentiation? Most of brands that you spoke about are larger brands, and the stickiness to that brand or the awareness of that brand is much higher, and they are umbrella brands, right? What about the sub brands? Sometimes there is a differentiation, or there is a positioning change. Have More, mass products, mass ice cream. Huber and Hawley, expensive, better, creamier, less fat, less air, hand churned, lower quantities, little more premium ice cream. When that positioning happens, the larger brand always thinks that it should shadow, or it can only let the smaller brand or the newer brand grow under its name. And we feel that they need to differentiate, and they should stand alone, without the umbrella of the larger brand. What are your views on it?
No, they should. I mean, I think Unilever bought Indulekha recently. It's a hair oil. So there are many small brands. If you see, many of the larger brands are also buying these local brands. So, and I'm thinking of brand examples. Indulekha came to my mind because it's a successful brand.
But that's still mass, because the positioning isn't too
talking about a premium brand.
Premium
talking
brand,
about a
yes,
premium brand.
Yeah. So what if, say, PG bought Forest Essentials? I mean, of course, it's already, it's already standing there. I'm saying this is when a new brand was created, not buying out a brand. It's, you're creating your own premium brand, sub brand.
No, so if you're creating a premium brand in the hope that somebody is going to buy it, is that the question?
No. Maybe in the future, but the question is that, should it tag on to the mother brand, or should it stand alone?
That depends. I mean,
okay.
it actually depends, because there are some cases where you tag on to the mother brand and you get better returns. Okay. Like, which are mostly your extensions, your varianting strategy. I mean, where you sort of, your mother brand is so strong, it's essentially a variant of the mother brand. And in some cases, it's better to have an independent brand, which, I mean, I don't know. I mean, I'm just thinking, nothing is coming to my mind right now of where
Sure,
something
sure.
has worked better. Maybe it will. Sorry, I'm not.
Sure,
able
sure.
to-
No issue.
No, I mean,
No
it's a
issue.
good
That's good
question. I'm
enough.
just,
Yeah. It's more strategy, in a way, because why am I saying this is because we come across this a lot. And
I mean, again, I'm not able to
premium-
think of a very recent example, but I mean, Kurkure was a standalone brand that Pepsi created. It's a very standalone brand
True,
versus
true.
Lay's, which has got its own 50 different variants that they came up with.
Yeah.
But standalone brands need a lot of support. So
Sure.
when you create
Exactly,
a standalone brand, you should
exactly.
also be prepared to support the brand to that extent.
And also,
But-
which means that, premium brands may need, a different kind of a spend and a different mindset, which is what, the struggle always is. Yeah.
Definitely.
Sorry, Saumya, I think we kind of already run out of time.
Yeah,
I'm
we
so
are
sorry to
almost
cut
run out
you.
of time here. That's what I was
Almost,
saying.
yeah. And
Yeah.
the second guest, the next guest is already
Yes.
has logged in.
Right,
So thank you
great.
so much, Saumya. I wish we could have spent a little more time, and it's so good and
Thank
so heartening to hear so much about brand, and that too, the intangible becoming so much tangible with research, with data, with analysis, and all of that, and your expertise coming in there, and the emotional connect. Thank you so much. Thank you, Sanjay. Thank you so much.
Thank you.
Thank
Thank
you.
you.
Yeah,
Thanks.
on behalf of Brand Club Ahmedabad and Gujarat, we thank you very much for
Thanks, Sanjay.
investing so much of time, your valuable time, and especially on Sunday. Thank you so much. I will keep in touch, and
Thanks.
we
Thank
made a promise that you will be coming back with more sessions with us. Thank you very much. And thank you, Neeraj.
Bye.
Thank you, Neeraj.
Bye.